Trade Confident family, guys, welcome everyone to Monday, March 25th. Let me just give you guys some, what I'm hearing online called some alpha this morning. It's a new term I guess we're using. So I think we were one of the first people to spearhead this concept with the Bitcoin ETFs by taking high volume nodes, which is nothing new to traders. But we've been showing you guys how we're using high volume nodes to actually look into the purchasing patterns of BlackRock, Grayscale, as well as Fidelity. And if you guys can see these kind of secret patterns in this secret chart here, I've done, I think, 2 videos on this. This is my 3rd series on this. You guys can actually find incredible buying opportunities. Why do we want good buying opportunities? Well, guys, guess what's coming roughly April 20th? We've got the halving event. And Bitcoin becomes very bullish. We have the daily issuance of Bitcoin going from 900 Bitcoin per day. And this is going to be dropped down to 50%, 450 Bitcoin per day that is going to be mined. All right. So a lot of supply and demand shock is coming here within, about maybe 15 days or so. Let me show you guys the secrets that we're kind of pulling from these charts and how we're getting money back in. We put in about $35,000 on this drop and we call this out to our members. And let me show you guys. We have what's called the visible range volume profile put on our charts here, and I just got the split into 3 different sectors. I advise you guys, please just copy exactly what I'm about to say. I'm giving you guys some crazy, I hear this word alpha out there, so we're going to call it alpha. Come to your chart settings, go down to number 3. Let me circle this for you guys so you can see this. Go to number 3, and then go to the second one over where you guys see 3 different layouts. On the first one, pull up IBIT, which is the Bitcoin BlackRock ETF. I want you to do GBTC, which is the Grayscale Bitcoin ETF, and then over here do FBTC, which is the Fidelity Bitcoin ETF. Now that you guys have that, come over to your charts and go to Visible Range Volume Profile. Visible Range Volume Profile. It's under Technicals. Once you guys click it on your charts, it's going to look like something funky like this. Quickly, let me show you how to make it look like mine, and we're going to get into the analysis so you guys will be able to track where the best buying opportunities are. Turn everything to blue under the up volume, down volume, value area up, value area down, okay? Take off point of control, in my personal opinion. Come over here, do row size 100, do value area 100. That's it. You don't need to do anything else. You now have a chart that copies exactly what I've done. Now that you do that for all 3 of these, you can watch every morning the buying, the inflows, as well as the selling, the outflows of each of the ETFs. But the theory states like this, and I think we're the first ones to pioneer this on YouTube, is that these guys are not dropping their prices down below their previous high purchased levels. They're high volume nodes, meaning a lot of volume has gone through at these specific prices. This is the beauty of a visible range volume profile. It says, this says volume per candle, but this says volume per price. And that is where you get massive data about support levels for the ETFs. So we called out to our members, hey, we're buying in another $5,000, another $10,000, and it was all down here at what's called the high volume nodes. A high volume node is simply just a blue bar that is pushed out further than its brother or sister left to right of it. This is what's called a LVN, low volume node, and this is what's called a high volume node. High volume nodes tend to act as support in the market. So what happened? We came back down, we saw the crash in the market, we came down to a high volume node, which looked a little bit different than this priorly because we got volume down here, but a lot of volume went through right at the highest amount of purchasing power. Does that make sense, guys? Where do you guys think the price has a likelihood of going up to now based off high volume nodes acting as support and resistance? Well, I think the BlackRock, which is IBIT, I think we have a possibility of heading up to about $41 here and magnetizing there, because once you come into a low area of low volume nodes, this doesn't act as a lot of resistance. This up here is going to act as resistance right there. So I think we could easily see Bitcoin today, over the next, I would say this week, give it a little bit of grace period here, we could see $72,000, $73,000 again because of how much bullishness we have in the market, because we have these gaps. Look at where the candle is and look at where the next high volume node is. Look at the candle and look at what's next. Low volume nodes up to high volume, okay? Low volume nodes up to high volume. So we have what's called a gap here. And I do think Bitcoin is going to try to push up towards this gap. I know people are also looking at this, so I'll leave this with you right here, is that some people are saying, well, now that we've pushed up so high over the weekend, we've created, well, in Bitcoin, we call this a CME, a Chicago Mercantile Exchange gap, either to the upside or downside, although these are ETFs. Could we potentially come back down and fill this? Yes, we could come back down and fill this. And we could actually do a pattern like this in the market where we do something like that, fake people out thinking we're going lower, and then we start doing the move back up into the halving event, which is around April 20th, right about there. So I'm not saying we're out of the woods, but if you guys want the best buying opportunities, one of the metrics to use is simply buying at the ETF's high volume nodes, because they have no incentive to drop their prices of the ETFs down below where they purchased the most Bitcoin. They're going to keep it above this. They've done this many times before, guys. They did it on this move over here. Nodes have changed since this, but there was high volume nodes right here at the bottom. I showed this to you guys in the last video. If you guys want to watch it, we called it over here. We entered more into the market right here as well. So watch these, guys. High volume nodes are going to act as resistance and support for entering and exiting. All right, guys, tomorrow we have a future forecast coming out on our website. You guys want to know, is the stock market going to crash? When is it going to crash? I have that data for you guys. This is actually, the data I'm going to show you guys has called the last two major stock market crashes. It's not technical analysis. It actually has to do with interest rates and the inverted yield curve. If you have never heard of those two terms, guys, please do yourself a favor tomorrow. Or today, go over to tradeconfident.io, click subscribe. We are upping our membership fee to $65 a month instead of $59 starting April 20th, which is estimated at the halving event. If you guys go under future forecast, you guys will be able to see tomorrow the chart that shows you how Bitcoin could be syncing up with the S&P 500 and the exact data you need to watch to be able to potentially exit some of your crypto, guys, before the stock market sees a crash. The S&P 500 is so ridiculously overbought right now with as much debt that the market is going through as far as the US economy. This is absolutely unsustainable. And if the stock market crashes, you better know the precursors of what has crashed it majorly the last two times. It is not going to come from technical analysis. It's going to come from federal funds rates, and it's going to come from an inverted yield curve. I'm going to show you guys how to track that, and I will also give you the chart so you can track what to watch for. Guys, this is really strong data we are not going to be releasing to YouTube here, because if the stock market crashes, I do believe you're going to see crypto suffer. I'll leave you with this. I know the narrative out there says if the stock market goes down, people are all going to hedge into crypto. If the stock market goes down and everybody's losing a bunch of money and they've been purchasing cryptocurrency through the halving event and they need money for their living expenses or retirement, where do you think they're going to pull their money from? They're going to pull it from their other assets, and money will come out of cryptocurrency if we see a massive recession and a stock market crash, which is, by the way, far, far overdue. So snag a membership, watch that tomorrow, and then I'll also be coming out with 8 more future forecasts in the next 4 weeks. Wanted to give you guys this great data here. I love you. Have a great day, and I'll see you guys tomorrow morning in the membership. Bye, guys.